The Treasury Department needs $1.6 trillion by the end of this year. How are they ever going to find that?
We just released a shocking report that they need $1.6 trillion before the end of the year. At least on July 28th, you are looking at, from the Treasury itself, their announcement of marketable borrowing estimates between now and the end of the year. During the July through September quarter, the Treasury expects to borrow $1.007 trillion in privately held net marketable debt, assuming an end of September cash balance of $850 billion. So as of the time of this recording, in less than 2 months' time, the Treasury needs to borrow a full $1 trillion. Now, I know what you're thinking, but wait, they're rolling debt over. They're going to use some of that to pay off some of the debt that they owe that needs to be repaid right now. This is just to account for maturing debt. And I know that you probably think that, but the key here is the word net. In other words, there is a lot of debt that's maturing right now that they have to roll over. But this borrowing announcement is talking about the net additional borrowing they have to do on top of all the borrowing that they have to do to pay back all the debt that is coming due. The announcement goes on to detail that in October through December of 2025, the Treasury is going to borrow an additional $590 billion in privately held net marketable debt, assuming an end of December balance of $850 billion. So for the rest of this year, the Treasury is targeting an end of year cash balance of around $850 billion. What does that mean? $50 billion mark. Now, this is literally just the checking account for the US government. So all tax money and all borrowing money first goes into this account, and then any dollars that they spend go out of this account. And despite the fact that this account used to carry a much smaller balance, for whatever reason now, the Treasury really likes to keep it around $850 billion. But considering this quarter, they are going to borrow an additional $1 trillion, and next quarter they're borrowing $590 billion. That means of the total $1.6 trillion that they're borrowing by the end of the year, only about $400 billion of that is going to refill their checking account. That means $1.2 trillion of that excess borrowing has to be done just to accommodate the spending that is in excess of taxes. As of today, the national debt is $36.99 trillion. And considering that that deficit, the amount that they're borrowing, which is the amount they spend in excess of the taxes, goes directly onto that national debt pile, we can do some really complicated, fancy math to determine what the national debt will be by the end of this year. By taking 36.99 plus 1.6, we can see that by the end of the year, national debt will be just about $38.6 trillion.
And, you know, to that point, I appreciated the sarcasm right there. I mean, these are funny numbers at this point, right? These numbers have gotten so big, but it's like, who cares, right? What's another 1.6 trillion between friends here, right? It doesn't even matter at this point. It's just ludicrous numbers. What I would love to see, and honestly, I don't have a dog in this fight, so I don't really care all that much. It's going to do what it's going to do. And that's why I don't get really involved in politics and news stuff or anything like that, because it's going to be what it's going to be. What good is it for me to get wrapped up in the day-to-day minutia of it? What good is it going to be for me to have such strong opinions if I can't change it, right? To this point, this is one of those things that I know I can't change it. It's like gravity. I can't change gravity, is what it is. But, you know, it probably would be a good thing if we had a little bit less debt. Just like any household out there, probably be a little bit better if we have a little bit less debt.
I know that many people were expecting the borrowing and the spending to slow down. So how does what's happening right now compare to what's happened over the last couple of years? Well, let's take a look at this chart that tracks the deficit year by year going back to 2020. And you can see very expectedly in 2020, the deficit shot up starting in March. For the next couple of months, added a few trillion.
Like I say, the people in government are so much smarter than me. They're incredibly intelligent, highly sophisticated people who know exactly what to do to make America great again. And because of that, I know that they will fix everything. I mean, realistically speaking, I don't know what's going on over there, but it certainly doesn't look like it's going in the right direction.
2021 was very similar, adding more spending in the first half of the fiscal year and less in the second half. 2022, we can see the net borrowing, the deficit.
Okay, on the mic with Mike, that's pretty funny. $36 trillion in debt, and they have the audacity to give me a credit score? Get bent, Treasury. That's pretty funny. I like that.
It went down significantly compared to the prior 2 years. 2023 and 2024 were almost identical, on track with each other in terms of how much net borrowing took place per month for each of those years. And now we come to the current year, 2025, and we can see that so far every single month this fiscal year has been above trend compared to 2024 and 2023, and obviously 2022, except for the most current month reported, which is June. And June came in just barely below the June for 2023, but still above the June for 2025. Now, when those June numbers came out, just as you might expect, there were a lot of people that were saying, hey, this is a sign things are turning in the right direction. The deficit is slowing down. Turns out it was just a timing issue, because over the next week, once June ended, the Treasury borrowed about $400 billion in 3 days. And we know this because the Treasury reports what it does down to the day. And you can see that from July 2nd through July 8th, they added about $400 billion to the national debt in net new borrowing. And $400 billion is more than sufficient to put the July numbers back above trend for 2023 and 2024. And just by the end of this quarter, end of September, the deficit will be $1 trillion higher than it is right now, ending at around 2.3 trillion, well above trend from last year and the year before, and getting dangerously near the spending levels we were seeing all the way back in 2021. So unfortunately, for anybody who is hopeful that the spending would slow down, it is not. Now, you might be wondering, who are they borrowing from? Where is the appetite coming from for all of this debt? And that's actually a big problem right now. Globally, the government bond liquidity index is at one of the worst places it's been since the data was being tracked, which goes all the way back to the great financial crisis. This tracks government bonds around the world, not just US Treasuries, but you can see a big problem here. The demand, the appetite to lend money to governments when you know you're probably going to be getting a yield that is lower than the rate of inflation over the long term, the appetite is drying up. The liquidity is drying up. And that's why the auctions, especially for the longer term bonds like the 30-year US Treasury, are going poorly, pushing yields up higher. This is why there's so much attention on the Federal Reserve right now, because it's only the entity that can print money into existence that can save the government from the
or if you're an outlier, you can print money into existence. Know what I'm saying, right? Hell yeah, we're breaking records around here. That's what Wild Snippy Norwood said. Hang on, somebody had a great quote. I, for one, am very thankful that Nancy Pelosi decided to serve in government. She could have been the richest trader of all time, but instead, she selflessly decided to be a politician.
their fiscal spiral that they're facing right now. Now, I understand that with everything going on right now, from Trump's tariffs being on one week and off the next, to this massive spiral in increased government spending, to the mounting pressure on the Federal Reserve to drop rates and to put anybody in place there who will do it, you don't need me to tell you that the markets are teetering on the edge of a massive melt up or a massive meltdown. That's why.
How about instead we look at some trade ideas? Let's start with over here. I pulled some data this morning. Let's go to scanner results. And this is what I pulled through this morning, plan for the day. So I sorted this by outlier returns. Yeah, I think everybody's feeling the same way as me. How about we look at some trade ideas instead? Let's look at SE, Builder, BE, etc. These are all the ones that pass through. Pretty much every sector is bullish this morning, except for energy. Pretty much every sector is bullish except for energy. And because of that, we have lots of opportunities, right? So we're going to start at the top, work our way down. I sorted this by the outlier signal returns. Terry says, huh? You woke me up. Outlier signal returns. So I actually dropped these already into trading view. Now, the issue that we have here is that the market's not quite open yet. So things are going to be all over the place. But a couple things that I want to look at is if this has earnings, right? So CSE has already had its earnings, so that's not going to be an issue. But one thing that we can talk about is gap and goes, right? So CSE looks like a gap and go to me. Now, what constitutes a gap and go versus a gap and crap? A gap and go is where it gaps up, obviously, and then it continues up higher. If it gaps up and then within 3 days, that's my rule. Within 3 days, if it comes back down and closes underneath the gap candle, it's off. So SE, it's a good start to the day, right? Remove 2 drawings. But then again, I got a long way to go to the end of the day. So this is a good start. Let's look at Builder. Oh yeah, there we go. This is beautiful. Whenever you see a stock close over its outlier block right here, that's a great start to the day. We got your 10 over 20, price over 50, closed on top of that outlier block. Big move up yesterday. Looks like this morning it's going to be down almost to that same point, right? And so this is another reason why I like to trade at the end of the day. I have no idea what's going to happen during the day. I don't have to know what's going to happen during the day. Just need to have a plan. Let's look at BE. All right, so this is a good example of why I like to have some rules. Oh, here's a good gap and go. I must have done this a couple of weeks ago. Gap and go. Gapped up over its order block, and not once did it close underneath the low of that candle. This is what a gap and go looks like. Everybody got that? Now, if BE closes the day under the prior day's low, I wouldn't be interested in trading this. I wouldn't be interested in trading this at all. But if it does close above it, it could be a great setup. Let's look at the next one, Billy. There we go. Ooh, Billy's right in the middle of an order block. I would avoid this at all cost. Anon. Ooh, look at this. A gap down after earnings and then real huge, strong, big candles right back up. Let's go SGI. Wait a minute. I own SGI. All right. This one is down ever so slightly in pre-market. It looks like I'm still up on the trade. We'll have to see where it goes from here. Morgan Stanley, not one I own, but one I am following for you guys. Looks like pre-market would be about at my stop loss point, but I only look at the end of the day. So all kinds of things can happen at the end of the day. We know that. But yeah, Morgan Stanley's not looking too hot this morning. SoFi. I also own SoFi. And I am a SoFi bro this morning, but I might not be a SoFi bro by the end of the day if it hits my stop out point. We'll have to see. Etsy. I also own Etsy. Looking at this one, it's still above my price that I got in yesterday afternoon, slightly down from the day before. So of course I would still own it. PNR. This is not Palantir. This is Pintier, right? Not Palantir. This is the off-brand Palantir. Pintier. It's closed above that order block. So when the market opens in a few minutes, that order block is going to basically it's going to end. It's going to stop like this one did over here. And then that would be a very bullish sign for me. PWP. This one actually has a bullish order block underneath it. That's what you want to see. This is beautiful. Let's go to APG. It looks like it's going to open down a little bit this morning, but still really strong. Look at this long candle wick right here. Look at this long candle wick right here. This tells you that buyers are in control of this. Buyers are hugely in control of this stock. If it moved that far down and then pushed all that way back up and then closed up with a green candle, that's what you want to see. A huge, huge buyer market right there in APG. Let's look at Wall. The wall is running right into a wall of order blocks. I would avoid that. SRAD, also closing above its order block. That should end once the market opens. So that one looks pretty sharp. We've got SYF, Synchrony Financial. That's a beautiful, beautiful start to a trend right there. We'll have to see how that plays out. CNM, also hitting an order block right here. I wouldn't touch it unless it closed above that point. So we've got all kinds of cool stuff on here. And we also have Chewy. Chewy's back. You know what? I'm so glad that you came back, Chewy, because now I get to do something that's really fun. I get to hit the ban user and delete all their comments. Chewy, bro, welcome back and goodbye forever. Yep, Chewy is gone forever. That was fun. All right, I'm out of here. You guys have a fantastic day, but listen, make sure you click one of these 2 buttons to save time, make money, and start winning with less risk. We'll talk soon.